Get yourself in the picture. Put my cup of tea down. Watch must be slow.
Good evening.
Good evening. If we can introduce ourselves, Andrew Brassey.
Paul Winder.
Paul, I forgot his name for a moment there. Good evening and welcome to tonight's webinar. I can't remember how many this is, Paul, we've done now.
We've done quite a few now, I would have thought.
Well, it must be into double figures. Into double figures, I think, with them. So hopefully those of you who've watched before know our faces and our names, etc. But if you don't, I've been with the company now 3 years and worked with the company probably, 7, 8 years, something like that.
Yeah, and I think I'm coming up to my 6th year.
Yeah.
So see it expand and see where we're trying to go.
Yeah.
So without further ado,
on we go.
We will go on, yeah. If I can work out, you have got two technophobes here as well, so
certainly with myself, technology is not my strong point. Certainly not. Oh, here we go. Here's our pictures.
So basically all this webinar about is to go into a little bit of detail about some of the opportunities we sell, and that can range from growth to yield to holiday lets to HMOs. We just want to cover a little bit about basics. We've got selected developments for each one.
We have.
Yep. They're not the only ones we've got. Any questions you've got, please put them in the questions column. We'll have consultation close button at the end, which are free. There'll be brochures linked to each development as well, but feel free to ask about any specific developments we have or what we've got. There's a little itinerary there of what we're going to go through. That's it. We'll discuss the projects in detail as we go.
There we are. So residential estates, been trading now 30 years or close to 30 years. As we mentioned just briefly, myself, I've been dealing with residential since about 2013. They were initially one of my agents. Enjoyed working with them, and so much I joined the company. Yep. Not quite the Remington advert where I bought the company, no. But came to work for them. Been here 3 years now. So I think that as we go through the process of talking about the developments we've got tonight, Paul, I think it's important to make that reference there to the number of years we've been working on the corporate let side of it. So I think a lot of people currently think short-term corporate serviced accommodation is a new model. It's something that's only been around for a couple of years. No. Not as far as residential estates are concerned. And we started here in Chester where we're based, and we've been doing that now for 15 years and built up a good database of companies that we deal with, BT.
Starting from the managing side, obviously, and then
that's right.
Progressing to the investment side and
I think
put it all together.
If we look at the timeline of residential estates, standard residential sales, typical high street estate agency, lettings department that goes hand in hand with that. And then the investment side started, I'm guessing, probably 2012.
Maybe a bit later.
With the likes of Mike Holliday. So, those of you who've again watched before will have seen Mike on the webinars, and he's been here from the inception of the investment team. And from there, we've grown the company from probably in those days 3 or 4 to where are we now? Probably
got a good few now. We've done
14,
pretty well,
15. So, as a company, we can't complain. And a lot of people, certainly my agents, ask, how's it been over the past couple of years? And COVID aside, the market's been very strong for us. And I think in certain instances, maybe not the right thing to say, but COVID has actually assisted us in
I certainly think it's put property at the forefront of people's minds, as a secure investment. And the one thing that people can feel reassured with is that we've literally walked every walk when it comes to the property side, with the management. So we're not just new kids on the block that think it's a good market to get into. We've actually seen how things have changed, and we'll be going through, back in the day, it used to be a standard buy-to-let with a bit of growth and a standard rental, didn't it? Or a HMO if you want a little bit more risk but high yields. And we've seen how the market's changed. And I think that's one of the things I want to highlight today. There's not one size fits all, is there?
No. No, and I think that's key, Paul. That it's not one size fits all. So when you talk to ourselves, it's very much about listening to what you want as the investor, and then trying to see what we have that will fit that criteria.
Yeah, absolutely.
And I think it's very much, if we haven't, we won't look to try and shoehorn you into something that isn't right. We'll give you options and hope that those options fit. So, yeah, I think let's move on.
Yeah.
That's an idea of what we do at Residential
I
Estates.
think just one other very small thing on there is something we're very proud of is a 47% repeat and referral business, and that's trying to find the right properties at the right price, at the right time, and the right locations, and bringing something to market that generally a lot of people can't. We are generally quite exclusive on the project.
Yeah, I think we are. I think we are.
Market, so.
And I think you're right. That 47% repeat business indicates we must be doing something right.
Yeah.
For people to come back and buy from us or recommend friends, family, I think we clearly have the right developments for
And speaking of developments, we'll go on. So the first one, the buy-to-let market. Now, we're featuring here Osborne Yard, which is in Manchester. Now, Manchester's a bit of a strange market for us in a way, and we're not going to be negative about Manchester. It's done us very well over the past, but
it certainly has.
It's been about following trends. And you know Manchester very well, obviously. You've got property in Manchester yourself.
I own a property by Affleck's Palace. Yeah. Oh, well, what was Affleck's Palace?
Yeah, absolutely. And I think what we've done, we are never going to say that if you're yield orientated, that Manchester's going to be the right place for you.
Not today.
Not today.
A few years ago, definitely.
Well, I think
prices have changed, haven't they?
This is where we come in. You can see, if you do some analysis on Manchester, you can see patterns. And I was looking on property data today, and up until about 2016, sort of the places like M1 and M3 were seeing high rising growth.
Very much so.
Then plateau, and then after that comes your Salfords and your Old Traffords, where we've had developments there, and now they've gone up. Insignia. And they've gone up 40% over the next 3 years, and they'll start to plateau now. Now, 40% is not to be laughed at. So what we try and do is, instead of trying to find a source of property that's going at the top of the market, where you're not going to get much value out of it, we've got to look for these new areas that have got the potential to regenerate, and the Northern Gateway is one such location.
And I think that's a good word there, regenerate, because I think if you look at Manchester, certain elements, the likes of, say, if we talk about Oldham Road, the Northern Gateway, drop down Great Ancoats, and you've got that area at the bottom end of Great Ancoats, where you've got the likes of Plaza, Ovali, Advent, which were certainly Advent, Ovali were built probably 2004-05, and that's where the growth has been.
Yeah.
And these, if you'd looked at that area, so the Great Ancoats area, or maybe Media City, Exel, where you've got Media City, and you'd looked at that 10 years ago, you wouldn't have dreamt of where it would be today. And that's, I think, where we see Osborne Yard.
It is, and we've got the good thing. And probably London investors will see this as well in Manchester. It's very much, we have seen what has happened in other locations over a period of time. It's not just a one-off. So, there is no doubt that where Osborne Yard is, Miles Platting, there's not much going on. But the Northern Gateway, which is signed off and done and already started, phase one has happened, is £1 billion investment over the next 10, 20 years.
Yeah.
So you can then go back there in 10 years and Osborne Yard is very much a growth project, so it might be the more experienced investor who can understand. Now, don't get me wrong, rentals are going to be, they're going to pay your mortgage and anything like that. That won't be an issue. Yeah. But what we're trying to provide is something where would you rather buy something 5 years ago at 200k that's now worth 300, or would you rather buy at 300 and not get much out of it?
Which you can. We've got developments in Manchester, the Press or the Crescent at sort of 300, 325 for a two-bed. But you look at Osborne at 200, 210, something in that order, and you compare it maybe to the same developer's other scheme, which we sold 2017, 2018, called Popworks, and that was selling at a similar price, wasn't it, at 200-ish. Now 250, 260. So we've got some strong
genuine valuations, and I don't want people to think that we're just trying to sell this because this is what we've got. We get offered lots of developments in Manchester. It's just that we are an investment company, and we're sort of saying, if you are someone who looks at long-term growth or growth down the line, or something that's going to be very profitable down the line buying at the lowest price, but you have to wait a little bit. I think then Osborne Yard and Mars Platinum and the Northern Gateway is that place. This is the first private development available for sale.
That's right.
Yeah, so it's slightly different, and like I say, with everything else flat off, and then like with London, everyone knows that there's everything reaches a peak and then it just gradually goes up, and we want to buy something at the bottom. So it might be more experienced investors that look at this who understand the concept of growth and how cities come to you.
Yes.
Rather than the other way around.
That's right. And it will push out that way. It's that sort of pebble in the pond, that ripple effect.
Yeah.
The development, there's only so much land in the city centre that's now developed, or the weight of it is developed. And those developments that will take place are going to be a lot more expensive. You know, you're looking at some parts of central Manchester, 350 to 450. If you talk about, say, Deansgate Square, standard 2-bed apartment in Deansgate Square, 440,000, 450,000. I don't see the return on that. It's more owner occupier. I don't see the yield that will achieve. Right. I think the rental value is certainly higher than Osborne, but maybe not twice the level or 3 times the level of Osborne. It's
very hard. You don't have a crystal ball, so all you can go on is trends. And like I say, we have seen it in the likes of M6, M7, M16. And these are the only areas that can be regenerated. They're commercial, aren't they? They're old, you know, they've got warehouses, so they can get regenerated, and that's why they're chosen. But we both got stories. It's like you worked very closely with the ones in Leeds, didn't you? I know Leeds is at Manchester, but we've sold Leeds lately. And the development you sold, everyone used to say it's too far away. It's probably half a mile from the city centre.
Yeah, a development called East Point on East Street, was it? It's called East Point anyway. And it is literally a 10-minute walk into the city centre, maybe 15 if you're a bit slower. But when we were selling it, which could be 2014, something like that, a lot of people were saying, it's not city centre, it's too far out. How am I going to rent it? Who's going to rent it here? But as an aside, sold it or sold one of them that I specifically know to a lady, paid 130,000 for it, 2-bed, top floor, nice views from it as well, with parking, 130,000. On the day of completion, the local agent Park Lane valued it at 200. Now, and I haven't looked actually. I haven't gone back into that postcode to see what it's worth. But you look at the other one we sold was East Bank for X1, and again, people were saying, because that was a bit further out than East Point itself, and you think, too far out. No, now. People can't wait to get into.
That's it. Everything we go off in Leeds now is further away than this. It's classed as city centre, and so with Manchester, I was at an exhibition once and I was chatting to this guy, and didn't buy from us, but he was already a very seasoned investor in Manchester, and he bought around about 10 years ago near the Noma, where the Noma building is now. One of the first new builds going up, and he had a few properties, so in his words, he could afford to take the risk, and do it. But he believed in what was happening in Manchester. And they had 2 beds there for 100 grand, and they're probably worth 300 now, so probably. So that's the growth market, and Manchester is very much on that front, but it's finding the right places, and that's why we've selected this particular development. It's not saying you're going to get initially high yields. You will do over time when rents increase, etc. But it is literally one of those where we'll go into it. I think you used the terminology before. I think it's one of those. It's a good pension pot one.
Yes. Yeah, it is a 10-year plan, probably, albeit that the regeneration side of it, the Northern Gateway, is probably a 5-year plan. This, for us, is more 5 to 10-year plan. I think, we're talking about rents. What do we think this Osborne would rent for? 2,000 to 1,250?
I think one of the good things about it is that sometimes you worry that you're buying the first development in a new regeneration. It's going to be tired. This is an incredibly modern development. It's very high specification, very focused on the green aspect of it and the carbon footprint, so you are buying something top range that is going to stand the test of time.
That's right. It's got these work zones, hasn't it, within each apartment.
Working from home.
And I think certainly within residential estates, and myself specifically, we have seen that shift of people working from home 2 days a week, 3 days a week, or in my instance, 5 days a week. And I think, for a lot of people, you have good Wi-Fi, a laptop and a mobile phone, you can. And I think certainly I only take 2 papers a week. I only take the Telegraph on a Saturday and the Sunday Times, but a lot of that is talking about people moving out into the country. And as long as they've got good Wi-Fi, so, and this is primarily London, people moving out into the home counties, And I think Osborne is one of those examples.
Yeah.
You've got this little work area that you can tuck yourself away. Good Wi-Fi, it's going to have a very fast broadband speed, and away you go.
Yeah.
You know, it's
and the development itself. There's a build on it. Obviously, there's a build time, but it's fully funded. You know, and when you are looking, if you are going to get that equity through the build, you're not putting a lot down to secure that equity neither, are you?
No, and I think, again, if we talk about Popworks, which is, in fairness, a bit closer into the city centre.
200 yards,
but, you know, that was sold at 200, it's now 250, 265. But the people who bought in Popworks put 50k down, 25%, and the same as here, you put 25% down of your 250k. And on the day of completion, you might have doubled your money. If it follows the route of Popworks, you will have doubled.
And that's the secret with off-plan finding those, isn't it? Because a lot of properties now sold off-plan are priced at completed prices, aren't they? But we know where we are with this and the trends we've seen. So at the end of the day, you could buy something complete at the top dollar and get a year's worth of rent, but it won't be the same amount as you're going to get on this and equity while waiting.
That's right. And I think you mentioned it's maybe for the more seasoned investor. And I think you look at some of these regeneration zones, certainly maybe Manchester, Liverpool, Leeds, Birmingham, and you have got to have an element of vision. If you looked at, say, well, we were talking about before Advent, bottom end of Great Ancoats, or Media City, and I can remember there's a development on it was built by David McLean on Trafford Road, Saltra, and we were selling that probably 2005, 2006. And I was stood there on Trafford Road pointing to where the BBC were going to go and saying, this is going to be Media City. BBC are going over there. They're going to bring a lot of people in from London. And I'm sure some people thought, what are you talking about, boy? You know, the BBC relocating to Salford. But you look at Media City today, and the change is there. And I think putting £1 billion regeneration scheme down Oldham Road will not create Media City, obviously, because you've got the waterways there, but will create that regeneration, that value in the area.
And it sounds harsh, but you could ask every single person who's on this webinar tonight if you could go back and buy in Salford now at prices 5 years ago, you jump at it, knowing what's coming, but you've got to believe what's coming. And what I would suggest is going to be a brochure that you can download here. What I would suggest is Google Northern Gateway. There's a dedicated website to it, and then you can see it for yourself. And then, like I said, this covers our growth market, I think, or one of the options that we cover our growth market.
And that website will show you the 5 different phases. This is in phase 2, so you're not thinking I'm buying into phase 5, which is probably a further distance away time-wise. That is, you're buying into the next phase that's coming along.
Cool.
Very much so.
Excellent. So we'll move on.
Just some images there of it. So short-term and corporate lets.
Short-term and corporate lets, something we know very, very well.
As we mentioned earlier, 15 years in this sector. So the development we're going to talk about today is Gospel View. Heswall is on the Wirral Peninsula, just south of Liverpool, on the other side of the Mersey. The peninsula is sort of split, I guess, by the M53 motorway. The left-hand side, the west-hand side, is the better part, generally speaking, against the D estuary. And oddly enough, you follow the D down and you come into Chester. Yeah. So I know the area very well indeed. I live about 5-10 minutes away from this development. Heswall is a very upmarket town, I suppose you would call it. Quite a largish town, very upmarket. Been in the news quite recently with the likes of John Barnes, the Liverpool footballer, who lives in Heswall and has been promoting his book, and I can't remember what his book is called. And I was on holiday last week up in Scotland, but he had a book signing and an hour's sort of review of a book at the local bookshop, Lingham's. And it's that caliber of person, it's that wealth of person that Heswall has. And I think what we will see is a lot of local investors buying into it because they understand the value of
and the market
of Gospel View. And if we look at the sort of comparable evidence, go back to property data. I think, what were you saying? It's 270, something like that?
So again, going back to trying to negotiate how we work. So with the off-plan side, we use some analytics called property data, which is open to everyone. It costs, and a 2-bedroom apartment here, if completed now on the same postcode, same specifications, same size, would be £270,000. That's what estimated the value price is. The average 2-bed here is £210,000. Now you look at that, that's roughly 25 to 30% below open market value for roughly a year's wait.
Yeah.
Now Heswell itself, over the last 5 years, has gone up 38% in property value. So you might think, oh, maybe I'm at the top. But no, if you take 38% and you're getting 25, 30% off, you're actually buying probably 2017 prices.
Yeah, very much so.
So that's where you're getting that equity. And that's very useful as that tool, because there's no point in us selling this. It comes back that, you know, we sell some 210 and it's worth 180 if it's completed. No, there's no point. But this is one of those markets. And on the corporate let and short-term side, which a lot of people on here would have heard us talk about before, it's not always the places you think they're going to do well. The bigger cities, Manchester, Liverpool, because they have got stacks of options for it. They've got stacks of hotels. They've got stacks of
too wide. That's right.
Whereas Heswell, property is incredibly scarce to come by.
Yep.
And there is a huge demand. You know, there's the offshore marketing, there's corporates around there. It's its proximity to Liverpool, the tourism with the golf and the beaches. There is a huge demand for the
corporate in there for
lets.
Maypole. The golf is coming to Royal Liverpool, which is in Hoylake, sits between sort of Hoylake and West Kirby. When it comes, 2023, the rental value. I mean, there are stories, and how true they are, of likes of Tiger Woods and some of the very top, Rory McIlroy renting houses in Colby, which is 5 minutes away from Heswell, renting houses at sort of 30, 40, 50,000 for the 3-week period.
It's not to say we're expecting them figures.
No, we're not. But what the program we use called dynamic pricing will adjust the prices, the nightly rate for Gospel View based on events such as the golf.
And that's how that works with this, in the fact that we are trying to provide you with an asset that is going to be profitable regardless.
Yep.
So you've got the equity in the property, you're buying something an incredibly good price. You can buy it for yourself, you can buy it for standard rentals. But we know, and all the figures we've shown on the last webinars, is that we would expect just by a different form of letting out to a different sort of market, you're going to double your yields quite easy. You know, the dynamic pricing suggested, between 10 and 12% net on this.
Yes.
And it's very reasonable for the price that you're paying for the property. So in this, we feel like ticking all the boxes.
I would say
you're getting growth, yields, and security.
That's right.
Multiple exit strategies with short-term and corporate lets as well. So it is an exciting project. I think sometimes, though, it's hard to explain to some of these people, some of these places where you might not assume they work very, very well because there's just nothing else out there.
It's not a known destination. I think if we talk to probably 100 people, maybe one might have heard of Heswell, 5 might have heard of the Wirral, and then probably the 100 would have heard of Liverpool.
Yeah.
And it's that, I wouldn't call it education, but it's that imparting the knowledge as to why Heswell as a small town would work in comparison to buying into Liverpool.
That's it, the amount of industry that's going on around there, which attracts contractors, corporate workers.
There's a huge amount going on with Peel Holdings on Wirral Waters. And again, they're talking about 50 billion for Wirral Waters, and it's a huge amount of money, but it is over a 50-year period. But you equate that, it's £1 billion a year that they're talking about spending on that side, on the Birkenhead side, and Heswell will benefit from that.
Yeah,
we can see a lot of, on the assumption Wirral Waters goes ahead in the format they're talking about, and the regeneration of the Merseyside coastline. A lot of workers could live in Heswell.
Yeah.
You look at the facilities that Heswell offer, the restaurants, the bars. You've got some quality establishments along Telegraph Road, and you look at the sort of comparables maybe for Gospel View. There's a new scheme launched. With your move, 5
two-bedroom properties.
2-bedroom apartments. They start at 385 and go through to 600. Slightly better position than Gospel View, slightly bigger, but you're talking of that sort of money. 385 to 600. There were 2 schemes on Telegraph Road, opposite Marks and Spencer's. Heswell has a Marks and Spencer's.
Well, if someone's buying this for an investment as well, what I can guarantee and what we know with the short-term let market is those properties that are twice the price won't get twice the rate.
They won't.
These serve a perfect function for what it is. So it is a very exciting project, I think.
Immensely so.
Location is key with it as well.
And we've spoken before, this development, it's written into the lease that it can be used for short-term lets. A lot of the developments, and certainly the ones we're talking about, are residential orientated, so you cannot use them for this. So, and again, you mentioned, Paul, that there's not a lot in Heswell that offers this facility, and that's purely because the lease doesn't permit it.
No,
this one is,
and it's one of those areas where not a lot gets built there.
No,
and the stuff that does get built is generally bought up straight away by local people who know how valuable it is to invest in Heswell.
That's right.
And at some point we'll be putting the boards up around there, and we'll expect to be inundated with local buyers looking to buy, won't they?
And we found that with the Swallows in Anglesey. When we put the boards up on Ross Niger, we got the local people who knew the value of what we were selling and knew the rental value.
Two calls today for it, and this is one of those exciting ones. But I mean, again, the rush we up. You want to arrange a call, that's no problem. But certainly this one does tick an awful lot of boxes.
Very much so. And if you are coming into Liverpool and you want to view the site, like of all our developments, apart from maybe the one we sold down in Southampton, Eastleigh, all the local-ish, if you wish to view, we'll organise a viewing. If you want to then a guided tour of Heswell, we'll spend an hour or two walking around Heswell, showing you where the golf course is, where the beaches are. Not a problem to spend the time and show you the value of what you're buying here.
I think it's one of those areas, especially if you don't know, you'd look at it and go, no, I get this.
Yeah. I was saying to Paul earlier, we were talking about maybe the value of Heswell. And it's totally an aside. You look at the cars that you see, Range Rovers, Aston Martins, the odd Ferrari. Oddly enough, you don't get that many Ferraris, but it's where I saw the first Aston Martin DBX, the SUV they've produced. Never seen one anywhere else, even likes of Cheadle or Alderley Edge when I go there.
Certainly an affluent place, but
it's very affluent.
That's why, the price buying, that's an excellent opportunity to
very much so.
We'll move on. Something slightly along the same lines, but sort of slightly different, and this is the furnished holiday let. Now, these have been very popular. The media have obviously been talking about the staycation boom. Now, just to set the record straight, it's never gone away. People have used these accommodation for a long, long time.
Well, I think you and I are an example of that. I mentioned earlier up in Scotland last week, booked it's a farmhouse as opposed to a cottage. Booked a cottage. We've been going there for years into that. Increase in Galloway.
I go to the lakes and stop in the same place every year. About 6 times. Well, obviously, over the last couple of years, that's been slightly different. So one we're highlighting here is in Sidmouth. It's an existing site, and it's got 7 first phase, let me get this right, 3-bedroom properties going up. Now, these are furnished holiday lets are aimed mainly at the tourism market, but they're also multifunctional in the fact that they can be bought for your own use as holiday let. You don't have to rent it out. You can buy it, use it, and then rent it out, or you can buy it purely as an investment property. Always good locations, excellent tax benefits, very good tax benefits.
I think that's a key thing for those people that are looking to rent is that tax benefit that you can get, the capital allowances, the offset various elements against it. And it's not onerous, is it? Is it 200 and something days?
210 days it's got to be marketed for. 105 off the top of my head it's got to be used for, which is nothing.
105 days when it's actually let is get my brain into gear. Probably
it's not even a third of a year.
It's not, is it? It's not.
We work on 75-80% occupancies, and that wouldn't even be an issue. Wouldn't even think about it. You get extraordinarily good rates. We've got in Eden Grove, I think some of our properties which is in the lakes are going for about £250 a night, something like that.
And if you look at the occupancy of Eden Grove, I don't see this being any different. And if you look at the other one we did in Cornwall, Kennecott, those occupancy rates are up there as well.
And weirdly enough, this goes against what we sort of say with one of the smaller places that you look for, because we want to sort of stick to tried and tested places on the tourism market. So Cornwall, Devon, the lakes, Wales, North Wales, Anglesey.
Absolutely.
We know that these will always have a constant flow. All again built to a very high specification, excellent locations, good facilities near them. They supply everything you want, but we have got lots of information about the benefits you get. There's the capital allowance, etc., the offset of what you can do. Some furnished holiday homes, just to be straight, sort of might have an S106 where it makes a little bit different on mortgages sometimes. I think that's only fair to say. Some don't. Some are just normal standard properties. But again, it's one of those markets where it's a little bit more emotional than the other properties that we sell.
I think it is, because it could be an element of a lifestyle investment. A bit, going back a number of years, the Spain apartment, Portugal, maybe Florida for the theme parks. And I think it's that element here. I think where we've looked at, say, Osborne or Gospel, it's very much look at the figures. Use your head, look at the figures. Not quite unemotional, but it's almost an unemotional buy. You're buying on the strength of the investment. Here, if you are looking to use it for lifestyle, you're buying on the strength of, do I want to go there for 2 weeks? Do I want to go there for 3 weeks? And again, it's that element that you could go 3 bedrooms, spend a month down there. You know, I know people certainly in Anglesey that the mum goes down with the children and spends the 6 weeks of the holiday there. And the husband comes down at weekends or vice versa. You know, that sounds maybe a bit not politically correct, but you know, you can work from home here.
You're also in areas where property prices are growing as well.
Yes.
So again, there's still that asset side of it.
Yeah.
I mean, but what can be harm if you get to use something 2 months a year, but you get a 5% return for residual use, and on something like this, that's going to be 15 grand a year, so you're getting the pleasure of paying for it as well.
It pays for itself. It puts a bit of money in your pocket. And I used to work for a Kuwaiti company, and we used to have this element of conversation, and this was before sort of serviced furnished holiday was really on the thing, on the cards. And they would buy into Manchester, and they would say, you know, we come over to the UK, either London, Manchester, and we come for 2 months. Can I live in my apartment? The answer is yes, you can. Of course you can. But I've got a 12-month AST on it. Well, no, you can't. If you rented it out, you can't live in it. You can't kick the tenant out for 2 months. And they couldn't get the grasp of that. Yeah. You know, why can't I live in it? I own it. Well, you've got a tenant who's paying you rent. Something like this
would have been perfect.
Would have fitted the bill for them.
Yeah.
Because they love the countryside. It's a strange thing, isn't it? Certainly Manchester, it's raining. Blimey, it's raining. For a Kuwaiti, it's raining. It's fantastic. You know, you know, the Middle Eastern clients hardly see the rain. So when they come to the UK, they think it's a bit colder. Fantastic. Something along these furnished holiday lets where they could block out a week, a fortnight, a month, 2 months would work superbly well for.
Well, you also look now on you know, things like a place in the country, and people are looking for something, and nearly everyone that you see, they want an annex. Yes. Or they want a side part that can be run as a holiday let.
They want something that's going to
generate an income. Whilst not compromising what they've got. And these are the same. They've proved incredibly popular. And the fact that we've got, you know, exclusive developments but in great locations, like I say, does give someone that slightly different side who just thinks, yeah, I just want something for myself. I want a second. I want to use some. I want to go and work away. But it'd be nice that it's sort of giving me an income as well.
That's right. And you know, we've made reference to Kennecott in Cornwall, 14 units there from maybe 14 apartment houses. Eden,
22, something like that, I think,
It's strange the mix of rentals that we get. You were saying earlier, Paul, that we've got a corporate let on Eden Grove.
I mean, sometimes this market really does surprise us. In Eden Grove, there's 3 other properties that are now on 3-month lets up until the end of November, which is a time where you would expect it to be a little bit quieter. But it's for an environmental search team. There's nothing else to rent it there.
And I think this is certainly something that is occurring. The fact that these very popular tourist areas, there is no rental.
No.
And a lot of private, shall we call them, individuals would not look to tenant for 3 months, or wouldn't look to find that type of tenant.
You look how it works as well. So these are all, I think, 2-bed apartments. I think they are, or 2-bed properties. And they probably sleep in at least 2 or 3 people, you know, so that's 3, that's 9 people that's maybe up there, 9 or 10 people. And that's far more cost effective for the company who's paying that than 10 hotel rooms, you know, because you've got your own rooms, etc. So it is, you can cook your own food, you can do your own laundry, you've got that comfort of, and you've also got the freedom of having your own space as well.
Yeah, not quite home from home, but almost, you know, you're not in a hotel.
Better than my own. But so it's an ever-growing market, this, and the staycation boom. I had to forget about that other thing because it's really not going to go anywhere.
I don't think it is. You know,
it's going to get stronger.
A classic example. We're probably both boring in that respect. We both go back to the same areas that we know, that we like,
we know that people are creatures of habit, and they find something they like, they use it again and again.
And the same will apply to
this.
Sidmouth,
Exactly.
and Eden Grove, Kennecott.
Yeah.
I think we'll see the same people returning. It might change slightly that they bring the family. You know, this time up to Scotland, daughter and son-in-law came, children, and we hired a larger property, 4-bed, as opposed to normally we'd just take a 2-bed. And I think we'll see more of this as generations go away together, and a 3-bed is ideal.
And once you sort of open, I mean, I live in Wales, and I do a lot of cycling in Wales, and you see these little remote spots that have got these little bungalows on. People think, well, who'd go there? You actually don't need that many people to go there.
No, you don't.
You don't need an influx of people. You just need, 30 bookings a year and you're happy. You know, and these are popular places.
And I think one developer I talked to an amount, he has a development in Anglesey. One person allowed pets next door. His friend who bought didn't. And he couldn't understand why the one next door was getting an awful lot more bookings than the guy that didn't allow pets. And it's that sort of thing that you look at some of these areas, certainly, into North Wales, into the Lake District, and
Walking's
a lot of
thing.
people bring pets with the dog. We have a number, too many, and we wouldn't book a property
Without a big dog friendly,
if we look at something like this, opening it up to 1 or 2 well-behaved dogs or whatever, and the rental market will increase further for you. The hot tub,
usually more well-behaved than humans are.
Yes, they are.
So
hot tub is not for me. You would never catch me in a hot tub, but plenty of people love them. And for £5,000.
I'm trying not to have that vision in my head, Andrew.
Thank you. It's not a good vision.
No, I mean, and we're here to help you with all the advice on setting up things like holiday lets as well. So it's not just we sell and then we go. We go through the whole process. We've been doing this a long time. We know what works, and it can be the smallest thing that makes a massive difference. It's not about spending fortunes all the time. So that's another one of our developments. Like I said, there's plenty more on that front as well. This is the one we just wanted to highlight. So we've covered growth. We've covered the short-term corporate let market, which covers growth and high yields.
Yep.
We've covered the furnished holiday let market, which is
lifestyle
more emotional
element sort of thing. More
so I guess yield is the next one.
Yield one, yeah.
Let's
talk
yield.
about yield.
Now, again, a lot of people have a lot of different needs in what they want, and there's a lot of people now that just want the cash they've got in the bank to be doing something.
Well, you look at the bank at the moment, what are you getting? 0.1, 0.2%, something in that order. You might get 1% if you're lucky. So you're right, there's people there with 50, 60, 80K looking to make an income from it.
Not looking to own a property portfolio.
No.
Just wanting something coming back, whether that's to pay for, I don't know, something like a cruise every year, to pay for school fees. It could be anything.
That's right.
And we feel that, when you're looking at the cash market, which PBSA, purpose-built student accommodation is, it's one of the brightest ones. And anything on the cash market with 80K, you've got to be quite careful with it, haven't you? Because, you can either end up buying a very low-end property with low-end tenants and a low profile of tenant, which means cost, or you can look at something like this, which is a growing market. But I think one of the points we want to make is getting the right places.
Very much so. Again, it goes back to that Kirsty Allsop and Phil, whatever his name is, location. Yeah. And I think a bit like you were talking about the serviced accommodation, the corporate let, the natural reaction may be to go to the big cities, Liverpool, Manchester, London. And I think a lot of people maybe look at students for PBSA in that respect. Let's go to Liverpool, Manchester, Sheffield, Nottingham, where you've got 2 or 3 universities with 50, 60, 70,000 students. That must be the place to go. Not necessarily, because unfortunately, a lot of developers have looked at those locations and thought this is the place to build.
They've took the best ones a long time ago.
Very much so.
A lot of these cities have people who live in those cities anyway. They have the HMO route, etc.
That's right. Certainly, if you look at Manchester and the sort of metro network, you could be out in Rochdale, you could be out into
Bolton.
Oldham,
there's loads everywhere.
Bolton, and the ease to get into the 3 universities in Manchester. It's so easy. Yeah, it's going to cost you, but you can live at home and commute in on a daily basis
very easily.
Over in a half an hour window, something like that. So
and it's a mature market. I mean, one thing is that I think something that maybe is not realised is that rents are pretty similar
Yeah, they are.
Properties everywhere for stable. So you're then looking from an investment side, you're making sure the rent I'm getting, it's going to be better against a lower price than a higher price. Obviously, you know, I mean, Manchester build costs, etc., land costs, you've got to pay for that within the property. So the one we're going to highlight is, you know, 80k, probably be 120k in Manchester, but the rent will be the same.
And that's strange, if that's the right word to use, you're right. But you look at the rents for student accommodation, be it Liverpool, Manchester, the one we're going to talk about, Newcastle under Lyme, One London Road, the rents are fairly standard across the board. So it doesn't matter which city you're in, the students are probably going to pay a similar rent.
Well, probably maybe perversely that if you're in somewhere like Manchester, because there is so much competition that you have to put your rents down.
Yes, yeah.
So you could actually be going the other way.
And we have seen that in Liverpool. We've got experience of Liverpool and Sheffield where the rents are easing slightly due to an oversupply, possibly.
Yeah.
And obviously, I suppose the last 2 years, well, maybe 18 months, the difficulty of COVID has had an impact.
And even though it is a cash investment and very hands-off, and this is very unemotional unless you're buying for your son or daughter to use, location is still very important.
Yes, it is.
It's always going to be the thing that centres around investment, location.
I think with any purchase,
it's got to be location.
It is always location is the driver, because yes, you know, you look at 80k, you could go into parts of sort of Lancashire, Derbyshire, and buy a 2-bed terraced house for what, 50? But it will probably always be worth 50.
Yeah.
The rent will be probably 300, 350. And at that rent, it only takes a minor thing before, by the time you cut your letting fee, your maintenance, you get a boiler that goes or something like that, you're talking £2,000. Roof. Yeah. It's your rent gone for the year.
That's it. And with the student intake, and obviously we've had COVID to deal with, we all know that. There's nothing that could have been done about that. But with the student intake, the one thing you've got every year is new tenants.
Yeah.
It's just a constant flow of tenants.
Very much so.
And you're looking for one person for one apartment. That's
right.
it.
That's right. You know, let's talk about One London Road. 5-phase scheme. Phases 1 to 3 are built, completed, tenanted. Phase 5, oddly enough, phase 5 is in construction, and phase 4 is now available. We launched it about a month ago, if that. 102 studios, self-contained. So I think, you know, just a bit of history about PBSA. It started in Liverpool 2011 maybe, and it was very much a room, shared bathroom, shared
clusters
kitchen.
They used to be called.
Cluster. And some weren't even clusters, Paul. It was just like a corridor at the end of the corridor. A bit not like, you know, university accommodation is.
Dorms,
thinking about, you know, what my daughter stayed in Manchester initially in her first year. It was just a long corridor. And at the end of each corridor was a wash facilities on the left-hand side and the kitchen on the right-hand side. Always untidy. Never, you know, sweeping generalisation, students are fairly untidy. The kitchen was it was rank. You know, it's one that didn't go down with dysentery. And it's progressed from there. As we've gone from 2012, we then went on to the ensuite room, sharing the kitchen still and in a cluster format, as you just mentioned, to a fully self-contained studio with kitchen, shower room, and common areas. And the common areas for the likes of, say, London Road, superb. You've got a sort of reception area. You're then into the communal lounge with the living wall. It's got a massive wall that is moss and so forth. Pool table, quiet area for the library, laundry, gymnasium.
It's better than more city centre studios, isn't it?
It's hotel for hotel. You know, it's the superb. And London Road, I think, is probably the best student accommodation I've seen. In all credit to Abode, that they've created there a superb development. And you know, we talk about viewings, and we're very open. Come and have a look. And I can remember 2017 maybe. It was an old garage. The garage had been demolished, but it's split level. And I can remember stood on the top with Mike Holiday, looking down, thinking, is this going? Not is it going to happen, but is this going to look like the CGIs? Is this going to be the 5 blocks and landscape buildings? It does. You know, the 3 blocks that are completed look.
I was going to say, and again, once in 3 blocks completed, we have people down to look at, you know, once the snag can be done, etc. and it's a good percentage that bought again.
Yes, they have.
You know, because they are seeing something. But also, when we talk about location, Newcastle-under-Lyme is a very small place, but it operates, you know, Keele University, and theoretically, Staff's University as well. It's not far away.
It's not that far.
There aren't many HMOs. There aren't many private residences. They're limited to what they can build there. But they're one of the fastest growing universities as well. So they've got this demand that one of these demands isn't going to fill, you know. But again, because the developer Bold got in very early, putting it frankly, they bought the best plots of land.
Yeah, very much so.
So you are always going to be, to give you an example, Keele's very high on the medical sort of learning, but then they've got a hospital as well where people carry on. And this is literally across the road from the hospital.
Yes,
where
it is.
I think we've got 70 nurses in there now, haven't we?
Yeah.
You know, so it's an incredibly good location. And just to speak a bit of economics, I guess, because the land was bought so long ago, it was before, you know, everything was going up, etc. And it's managed to keep a price that is very low for student. We sort of think there is a cap on student, don't anything over 100, and you're paying too much for a student, aren't you?
Very much so. Yeah.
You know, and with this, you've got this. We know the rents work because we've seen the rents that are being
we've got
achieved.
the evidence of Keele House, which completed
Ormhouse.
2017, Ormhouse 2019. So we've got two completed developments where, certainly say Keele House, rent started at sort of 100, 125, and now 135, 145. We've seen that increase in the rents. Ormhouse, 140, 150, that sort of rent. So, and we're talking about sort of 140, 150. And you might be paying a bit less than that in Liverpool, similar in Manchester, a bit less in Newcastle, in Newcastle up north, in Sheffield, in Birmingham. And yet the value at 80k, Manchester would be probably more like 100 and odd, 120. Liverpool would be probably 90.
Newcastle looking for over 100, Birmingham would be over 100.
That's right.
And arguably you're going to get a better rent and in a better location, a better property.
Yes.
You know, I'm not saying that the people who bought, you know, 5-6 years ago in Birmingham are not doing very well. They will, because they've been the best locations again, but they bought at a certain price.
They bought at the time. That's right.
We're talking about now. And it's just something that's very easy, you know. And in fairness, we have had COVID, so we've had little delays on these.
Yes, we have.
Because, you know, building materials, etc. But the great thing is 1, 2, and 3, even though we missed a term, they're all fully let. You know, and it's showed its flexibility, not only students, but the nurses and also HS2 workers.
That's right.
You know, so it's not all doom and gloom by any stretch of the imagination. And you've got a good track history with it. You get 3% on your deposited funds as it's going through.
8.5% on completion.
8.5% on
completion. A short return for 3 years.
Which isn't too bad for something. And like I say, we are seeing a different type of investor. I think, you know, we've seen people who are diversifying portfolios to protect themselves from maybe interest rate hikes, etc. We're seeing maybe people going to retirement or semi-retirement who've just got a lump of money sat in the bank and just it's doing nothing.
And they need to create an income from it.
And they don't want anything to do with the property.
And that is a great attraction of students. It is very much put your money in, buy the property,
collect your rent,
get the title deed, collect the rent.
Yeah. And again, you mentioned title deed. These are all, everything that we sell is fully owned properties.
Yes.
You know, there's it's not shared ownership or anything like that. These are all properties and assets that you can do whatever you want with at the end of the day. Obviously, this rents out to students, but in terms of your exit strategies, you're not tied in for anything. But yeah, I mean, from a yield point of view, these are proving more and more popular, aren't they? And I think
that's right.
People understand a little bit more that, you know, they are going to be the future. You think from a council's point of view, there's a housing shortage. You know, what they don't want is 10 rows of streets all over the place.
Yeah.
They want everyone on one place, and we know that certainly obviously students are far more comfortable in these as well, aren't they?
Very much so. I think there was a report, was it Savills or Knight Frank that did it, that said if the students that were in HMO came out into PBSA, it would free up something like 600,000 homes for family occupation.
Yeah.
And just thinking back to my time in Liverpool, top end of Smithtown Road, virtually every house was student accommodation. And they've all gone now.
Yeah.
In fairness, they've been flattened and a new school's been built there. But that's a scenario that councils want students in this type of accommodation. That's why they give the planning permission.
That's why they give the planning
permission. They want to get them out of HMO. They want to get students into quality accommodation, so they haven't got issues of so forth.
They've got someone on site all day long who looks after the There's just none of the old issues. But again, so
you made reference to overseas students, and again, there's a report out there that's saying that this type of accommodation, where you've got a communal hub, and we're talking about Block 4, 1 London Road, 202 apartments there. You get 102 students together. They create a community, and it integrates some of the overseas students who might just have sat in their room in an HMO.
And then that creates your future tenants as well, because it comes back with the reputation of being somewhere that people want to go.
That's right. And you made reference to the Royal Stoke University Teaching Hospital across the road. There's about 800 to 900 students there, but they're going to be there for 5 years. If you catch them in year one, they're going to be there for 5 years.
For a good period of time.
Keele has just opened this year, a veterinary site.
Yeah, that's right, yeah.
7 years for a vet. Yeah. You think, hold on a minute, talking to a doctor. He's done 5 years. The vet has done 7 years. And I queried this once, and the answer is a human can talk back to you to tell you what's wrong. Your dog can't.
No,
that's why it takes 7 years to be a vet.
Very true.
And you think, all they can go on is the symptoms that they can see from the dog.
And going back to what we were saying about the bigger cities having a lot of home residents, I don't know what the figures are for Newcastle Man, but I would say that high 90% of people that have had to travel there and need accommodation.
Need accommodation. And I think, whilst we talk about that travel side of it, certainly most student accommodation I've sold in the past never would talk about parking. If it had parking at Liverpool, Manchester, Leeds, didn't see the point of it. Here, where we're talking about medical students who may be slightly older, they could be starting their university career at 21, 23, probably have a car.
Yeah, 100%.
And I think generally a lot of people have a car anyway, even at 18 these days.
It's the birthday present of choice, isn't it? The 18th birthday present.
Is,
not for us,
it used to be the old classic Mini. I'm not quite sure what it is now. Yes. But the parking here, 5k, and you will generate the 8.5% assured return on the parking on your 5k. A good add-on, I think, to student accommodation here for London Road.
It is,
because I can see a lot of students having a car. And when I've been down recently to visit, we're doing tours of Newcastle under Lyme, you look at the cars, and you look at some of the cars, and it's not the clapped out old banger on maybe a 52 plate. I was there on the 12th of this month. It was a brand new BMW 1 Series. There was a Lexus, slightly older, but you looked at the cars and you thought,
it's a great image to have as well, though, for the place, isn't it?
Very much so. Very much so.
And ironically, talk about HMOs.
Let's move on.
We are. Now, we also, as a company, we are an investment company, and the one thing we try and do, and both of us are involved in this side, is we know that there's seasoned investors out there that maybe are more hands-on and deal with HMOs, etc. Yeah. And we don't want to alienate that, but we just have to be very strict on what we do. So we do have a list of HMOs and property portfolios from time to time. So if they do interest you, please register, because what we try and do is, in essence, find motivated sellers for motivated buyers. We sort of know that through a local online or Rightmove or estate agent, to find a buyer takes around about 5 months. We're an investment database. Every HMO we've sold, we found a buyer within 3 or 4 days. And that's because our job is to negotiate a deal where they're happy to sell at the price they get, but there's plenty of meat left on the bone for the investor as well. I think
it's about finding something for both parties, isn't it? So the buyer is getting a good deal, the seller's getting a good deal.
Yeah, and then that takes some time, because a lot of investors want to sell and wants to get the max, which I get, but ultimately there's plenty of reasons why some people don't want to retain properties, some people want to convert, do etc. And then some people just think, right, okay, I had this quite a while, I've been running 10 years, I'm actually quite happy with this, and we can negotiate that deal. So we do bring them on from time to time. We are going to have, an entity to show people that, and that also includes property portfolios. So people who want something maybe a little bit bigger, a little bit meatier, the returns can be very good. I'd say probably more an experienced investor than a first-time investor.
Well, we have I can't remember what it was. The 6 townhouses, terraced houses. Was that North Wales?
That was in Valley and Anglesey.
Valley and Anglesey, thank you. Yes.
Yes, six houses, and an excellent deal for the buyer there.
Fully tenanted. History of the tenancies.
Running some now on holiday lets as well. The Sarby Bridge one, we do a lot of research into it. That was 6 properties within 1 freehold. The independent market valuation 465.70, and it was sold for 415. So someone's getting a good deal now. They are quite infrequent. We try and get more and more. Chris, just to answer your question, just drop us a line for a consultation call. That's not to try and talk you into it, it's just to explain how you do it. And you've also got the calendar in there, I think, that Jess just put on. We've actually got a couple coming up pretty soon as well. So we do try and bring those on. We're not saying there are strict criteria that we do. They've got to be fully tenanted, fully licensed, fully certificated. We prefer professionals to students. We don't really look at student properties. They're getting a little bit harder to leverage. So professionals in good locations with good tenant issues and good average rentals, all on no restricted tenants, etc. And they work, because there are people out there looking to do it. And the fact they know they can get a quick buyer, maybe get a few quid less than what they will do normally, is what motivates them.
And I think, is an HMO ideal for your first purchase if you're new to the property industry? And we all have to start somewhere, but I would probably say no.
No, and I think in all honesty that lenders probably don't.
They want the
They prefer someone who knows
what
who've got a bit of a history about it, and that's, you know, if it's seen as unfair, but it's just for their risk factor. You know, it's something we've got to be careful of, you know, because they aren't standard. You know, there are certain things, I think, going on HMOs and short-term lets. We believe that short-term lets offer the same returns as HMO, the same options and AST, but a lot less
hassle. Yes.
But, you know, at the end of the day, we're not here to try and change. If someone's got a portfolio of HMOs and it works for them, brilliant. We're not going to stop it, you know, and the same with portfolios. They are generally, you know, you need a little bit more cash deposit. They are going to be high price, but the ones we do, we start off in HMOs as a minimum of a 7% net on cash purchase price. You know, on a commercial asset, etc. And we try and work around there and get as high as we can until we find that magic number. So I don't ever want to alienate whatever. I mean, I bring on developments and acquisitions, but I've been in sales as you have. And I want to be able to, or as a company, we want to be able to just say, right, okay, yeah, we've got something. Instead of trying to put you into something that you don't want, let's give you something that you do want.
That you do want, yeah.
You know,
and
as long as your numbers work.
That's where our side of it comes in. Listen to what you say. The consultant, whoever you're talking to, will listen to what you want. We may not have it, absolutely fine, but we will offer what we have, and if it suits, great. If it doesn't, you're on our database, and you know, in a month, 2 months, 6 months, something may come along that is ideal for you.
We just want to make sure that what we do bring along ticks all the boxes.
Very much
You're not going to have any hassles with it.
And I'm sure a lot of people say we get offered a huge amount of property. And we do.
No, it's staggering.
It is amazing how many developers come to us, how many individual clients come with an HMO. Paul will do the sort of initial legwork on it and think fairly quickly for some, thank you very much, but it's not for us. You do a bit more and you still come to that decision, it's not for us. And when I say it's not for us, we don't think it's right for our investors.
No, that's the point, yeah.
Because it's all too easy, I think, just to look at it and think, yeah, let's pop it out there, let's put it in the marketplace, see what happens, sell a few. But we then have to manage that side of it, your
and
expectations.
The expectations,
We have three very capable people in after sales that we need to ensure that their work is as easy as it can be, because we've brought on the right developments. So I think
with everything we've got there, with the growth, we know what's happening in Manchester and the trends, and we know that's following that. We know how short-term lets work, and we know about growth in that market. We know the PBSA works, etc. And now we know this works, and that's what we really want to do, isn't it? And like you say, we've got into a position now and a reputation where we're not scared to say no to something.
Oh, very much
There's
so.
no need to sell everything that comes out, and we do,
not at all.
without disrespecting any of the ranges. I'm on a lot of mailing lists, and it's the same old thing that gets churned out. And a lot of it can be easily disproved as well about what's being quoted.
Yes, you look at some of the rents they're quoting, or some of the gross figures they're talking about, and you look at it and think, just come to Rightmove and qualify that. You know, something, let's say, for 100,000, and they're offering a 10% return, or whatever,
it is,
10k. By the time you put the service charge in there, the letting fee, you might be at 12k. So you're talking of £1,000 a month. You go onto Rightmove and it's there for 600, 700.
That's something wrong somewhere.
There's something not quite right with the figures. We will always look at the figures. Even on the furnished holidays, we'll look at the figures and ensure that what we're quoting is the going right.
All the information we get is usually from a third party that can't be manipulated. For example, on a HMO, you send out a spreadsheet, it's got every income and outgoing on. We don't include mortgages because that's your personal situation or tax, etc. But it's every income and outgoing out, so that there's no hidden. There's nothing hidden on there.
And you look at the figures we quote, it's there on Rightmove, Zoopla, and certainly say that the furnished holiday lets you could go onto Sykes Cottages or Cottages UK, and you can verify the figures we're talking about
yourself.
And, you know, it's very transparent, or we try and be as transparent as we can. We also use something which we mentioned in a previous webinar, FACT, FACT, and that is a company that will do the due diligence for us on the developer. So we will look at developers and think, on paper this looks okay. Send it off to FACT, and something will come back that we haven't seen. They've dug a bit deeper. They've got that facility, and thank you very much. It's not for us.
Absolutely.
So whatever we launch, we try and ensure that, to the best of our ability, that everything about the developer, the funding, the planning, it is all right.
In line and in place, yeah.
And go back to Gospel View, residential scheme. It was ourselves that went to the developer approached us, but it was then us saying to the developer, look, let's go down the short-term, the serviced accommodation, the short-term let route with this, the corporate let. But for that, we need the lease to be amended to this level, to this degree, which permits it. Actually,
which doesn't affect anything else you can do.
No,
it doesn't affect.
You can put it on an AST. You can sell it to an owner.
It's another option. It's another option.
It
that's all it is.
Option,
it's a letting option.
The lease permits it. There are instances where we've had clients come back to us and say, "Look, bought this property. Can you put it on short-term lets for us?" And first question: does the lease permit it? 2 days later, they come back. No, can't do it.
That's it.
What we offer, we ensure that we can do that.
100%. And then moving on, so I think we've covered an example of the properties that we're selling at the moment. We do encourage people to book a free consultation call. We are not a property club. There's no price for our advice. Between me and Andrew, we've got multiple years in the business, haven't we?
Too many, maybe.
Yeah, too many,
Paul. Yes.
So do that. Book a call. Have a speak. We will try and work out what you want and what we have got that suits. If not, there might be something coming up in the pipeline, but we're not going to try and put in something you don't want.
If we do, if we have the right property and you have registered for the webinar, which you're watching now, you will be offered a free legal facility. And when we talk about free legals, you could use your own solicitor, you could use the nominated solicitor, whoever you wish on the conveyance, and £1,000 will be credited to you. So we would give you £1,000 towards the cost, and that, as I say, could be used for your legal fees. We've advertised it as a legal contribution.
Could be used for anything.
Could be your furniture. Could be stamp duty if you're going to have to pay SDLT. So if you buy from having watched the webinar, there's £1,000 contribution towards your purchase.
And well, finally, access to third parties. We are a passive investment in the main company, so a lot of our investors have got busy lives and they want help with things like tax or mortgages or solicitors. We're not qualified in that, but we know plenty of people are, and we're happy to walk with you all the way through the process. You are never alone on it. If you're like thinking, I live in London, but I want to buy something in Heswell, how do I do it? We do this day in, day out, and it's really not that difficult anymore, is it?
And whilst Paul and I are not technology orientated, these transactions can all be.
I just thought this has gone out.
Yeah, we're live.
Yeah.
But you can buy, as Paul mentioned, in London without actually coming to see your solicitor in I don't know, let's say Heswell. It can all be done online.
Management companies, everything that we do is set up to be fully managed for you. You do not have to use that facility.
It's there if you want.
You can use locals, you can do whatever you want, but at the end of the day, most of our investors, whether it's overseas, London, somewhere else, just busy lives, they just want everything in place, and we have the facilities to be able to do that, and a fabulous after sales too. So thank you for listening.
Yeah, there we go. Thank you very much.
I think we're done.
Hope you've enjoyed it.
You've got contact number there, yeah. Absolutely. Off to North Wales for me now.
Back onto
Heswell for you.
Go past Heswell on my way home. Indeed.
So thank you for watching.
Very much. Have a good evening.
Have a good evening.
Thanks a lot. Bye-bye now.